Hey everybody, Jessica Copeland here with Unsecured Finance Solutions, and I'd like to welcome you to our first ever webinar series, Financing Your Business from Start to Finish. I am extremely excited that you're here with me today because we're going to be starting this series off with a bang. We're going to be going over some of the fundamental and basic information about one of the business finance industry's most popular products, business credit cards. Now, whether you're in the dark about this product, you already have business credit cards, or if you're in the market for them, this webinar should give you some insight on what having a business credit card means to you as a business owner. Now, before I begin the breakdown of the 411 on business credit cards, I want to give you a little bit of a background on myself and what, let's say, authority, so to speak, that I have in providing this information. Now, as I mentioned earlier, my name is Jessica Copeland, and I work tirelessly at funding small businesses around the country. I started dabbling in the finance industry many, many years ago, developing many professional relationships and soaking up as every bit of knowledge as I could along the way. And I began focusing specifically on the unsecured realm a few years ago, which led me to starting Unsecured Finance Solutions. And this, of course, is where I continue to work hand in hand with business owners to fund the companies. Now, I provided, as you can see, my contact information on here in the event that you have any questions about what I'm about to go over or any questions in general. You can call me or shoot me an email, and if I don't answer right away, I'll get back to you at my earliest convenience. So let's go ahead and get this party started. I mentioned earlier that we're going to be going over some of the basics on business credit cards. And I didn't say that, and I'm not doing this to dumb anybody down, but I would rather educate from the ground up. And this, in reality, essentially, in short and layman's terms, is the definition of growth. So starting from the bottom, starting from ground up, what are credit cards? Credit cards, or a credit card, is a credit instrument enabling a cardholder to make purchases which are paid for by the card issuer, to whom the cardholder becomes indebted and must pay the balance back. Now, with credit cards, we all know what a credit card is, and I'm sure we all know that there are multiple subtypes to a credit card, and that's essentially what I'm going to be breaking down here, some of these subtypes, especially when it comes to the business side. So what is a business credit card? A business credit card is just a credit card used for the intention of business purposes and to separate business and personal expenses and or credit. Now, you'll notice that I put and or credit in here, and I want to emphasize that. The reason being is because not all business credit cards will report to business credit or will separate business and personal credit. Of course, you're separating the expenses. That's with any credit card, business or not. But when it comes to separating the credit, you've got to do your research, So if I were to explain or summarize in a nutshell what business credit cards were, I'd start out by saying they're completely unsecured. This means that there is no collateral, there's no asset, nothing being seized by the banks in the event of a non-payment or default. Now, because they're unsecured, most of them are going to require a personal guarantee. And personally guaranteeing something just means that you are responsible in the event of a non-payment. Now, just because you're personally guaranteeing the credit card itself or the line of credit, whatever it may be, doesn't mean that these credit cards are going to report on your personal credit. Not all of them do. Now, I mentioned earlier some do, and again, you want to do your research to make sure that that particular lender does not, if you're looking to steer clear of personal credit. But the good news is not all of them will, whether or not you're personally guaranteed. Now, business credit cards can then be subtyped or broken down even further. Now, personal cards the same, but in this case, we're talking about business, but they can be broken down even more into charge cards or revolving lines of credit. And I'm going to go over exactly and specifically what these two categories mean and the details. But with revolving lines of credit, they're going to be interest bearing. And this is the majority of business credit cards. So with the majority of business credit cards, you've got an interest bearing account with every balance that you place or keep, maintain, whatever you want to call it, over 30 days. Now, I do recommend with business credit cards that you use them as short-term financing. And this is what I tell everybody. Credit cards, they can get expensive with interest, especially if you have a large purchase that you need to place for your business, a high balance, and then you make minimum payments for as long as that balance lasts. Depending on the size of that balance, it could last quite a while, quite a few years, racking up more debt in your name because of the interest that you're adding on. So you'll be paying a lot more in the end. Certainly recommended if you have a payback plan. Know how you're going to use these cards, what their use is for, and how you're going to pay them back. But that being said, business credit cards can be a possible lifeline for entrepreneurs and small businesses. I mean, think about it. You're a startup business, and reality is business financing is difficult to come by with a startup business, especially when you don't have collateral or something to use to acquire that loan, or whatever type of loan it may be. So business credit cards, as long as they're managed well, as long as you have a plan or the ability to pay back the balances that you plan on placing on there, or at least you know that you'll be paying a little bit of extra in interest, this is a great opportunity to start up a business or to reserve some funds in the event of an emergency, or in the event to bridge through a certain time frame while you're waiting on a payback from a customer, whatever it may be. So to break down a little bit further, I did mention earlier you can kind of break a credit card down into whether it's a charge card or a revolving card. And specifically, a charge card is a credit card in which the cardholder must pay the balance back in full by a specified due date. Now, the good news about charge cards, there's no interest added onto the balances. The bad news is you got to pay that balance back in 30 days. Now, depending on the business and your industry and what that purchase, let's say, or the balance you're placing is for, that might not be bad news. A lot of businesses know they can pay it back within 30 days based on their specific industry, or their industry, or their business. And that's not a problem at all. Good for them, because they're not adding interest, so it's less money they have to worry about, and not have to worry about anything added on. And along with interest, you're getting a no preset spending limit most of the time. What this means is, unlike revolving credit cards, you're not given a specified amount that you can spend up to. Like revolving credit cards, you're offered maybe 5, 10, 15, 20 grand. With charge cards, typically, you have a no preset spending limit, which means you can spend what you need based on your business and based on the needs of your business. Now, that being said, you can't go hog wild and go throw $100,000 on a credit card, usually, unless it's been confirmed by the bank that purchase is allowed. There is a cap most of the time, even with no preset spending limits, and that cap is typically based on what your personal credit is, and what your personal credit lines are maintaining. However, you do have a little bit more flexibility with these spending, quote unquote, non-preset spending limits than you do with a revolving limit. Now, along with no preset spending limit, no interest out of the balances, you also get from some lenders an extended payment option. Now, this is really good for the business owner, because based on the needs of the business owner, you might need to wait 45 days before you can pay something back based on a contract that you've got or an invoice out that you have for your clients or customers. So some banks will offer this extended payment option to where you don't have to pay that full balance back in 30 days, but instead in 45 days or 60 days, depending on the bank. So this is also a benefit with charge cards. Now, of course, as with revolving credit cards and pretty much any other credit card or corporate card you have, most require a personal guarantee. Of course, in the event of a default or in the event that the business can't pay, they'll come back to you. So we talked about charge cards, revolving credit cards. It's very similar. They're credit cards, but the differences are your payback, how much you have to pay back, because interest is added to these accounts. So you've got a revolving credit card, which is just a credit card in which the cardholder can make minimum payments, and balances can be withdrawn, repaid, and redrawn again any number of times up to the allotted limit amount. Now, with revolving credit cards, as I already mentioned, you do have interest rates added to the balances. Good news is you've got 30 days before that interest rate is added. So if you can pay the balance off before that 30-day statement period, you don't have to worry about the added interest rate to that balance. You do have a preset spending limit on revolving credit cards based on your personal credit profile. If you're personally managing $4,000, $5,000 lines, you typically would get a rough similar approval with business cards. So you would see a rough $5,000 on business cards. Depending on your income, industry, revenue, etc., they can go up or down. Good news is they can fluctuate. This means that you can get increases with any credit line that you acquire. They can go down, but the good news is they can go up. And with good management, good relationships with those banks, you don't typically have to worry about the limits going down. Of course, just like I mentioned with the charge cards, most of these credit cards require a personal guarantee. And I want to go into a little bit more detail on the personal guarantee, what that means, and why it's necessary. It's basically just an agreement to make oneself liable for one's own or third party's debt or obligation. You're basically saying, I'm responsible in the event that they don't pay back or the business doesn't pay back. Now, the reason there are personal guarantees for loans, it's used to alleviate the risk from the lender, which makes sense, obviously. If the lender doesn't have that security, then who are you to not pay them back? Or, how do they know you're going to pay them back without any security, in this case, that personal guarantee? Now, reality is 2015, more and more businesses are requiring a personal guarantee. For instance, the Small Business Administration, they're now requiring that all loans that it guarantees are also personally guaranteed by anyone with 20% or higher ownership in the stake. So it wasn't like that in the past, but it's just a safety measure. It just ensures that this loan is going to be paid back, especially with an economy that fluctuates, and ours, as we all know, fluctuates. A lot of the personal guarantees are unsecured. So typically, like credit cards, forgive me. So just like with credit cards, it's unsecured, meaning there is no collateral, no asset. And if you're personally guaranteeing it, a lot of times it's because there's no collateral. So usually if you don't have your home to put up, then they're going to come back and use your credit or your personal guarantee as that security. Now, most, actually, I'm not going to say most, anytime you are guaranteeing something, you're going to have your credit pulled. The banks will require a personal credit check to make sure that you can pay back the debt or the obligation in which you're guaranteeing. The reason being is because especially if there's no collateral or no assets, no other security, they need to know that you can pay it back. And they're going to need more than just your word. Your credit is basically saying, yes, I make my credit payments on time. Yes, I've got this number of accounts, but I'm not overly utilized. I don't have too many obligations versus my income. So your credit is given all that information, which is why it requires the personal credit check. Most guarantors do have the ability to negotiate terms. And this is really important with credit cards because, like I mentioned earlier, limits increase. They can go down, but they can increase. Interest rates can go down. We're going to go talk about interest rates in a little bit, but you have an interest rate of, let's say, 20%. That's quite a bit. But with a credit card, that's normal, unfortunately. But you don't want that limit or that interest rate on a credit card that you plan on using every single month. Well, as the guarantor, knowing that your credit qualifies you for that account, you've got some negotiating room. And that's the beautiful thing about being the guarantor. You can negotiate these accounts, whether it be the limit or the introductory period that you're offered or the interest rates, whatever it may be. So when the banks are checking your credit, they got to pull it. And that's where inquiries come into play. An inquiry is basically a stamp on your credit report. And this is created when it's accessed by an outside lender, creditor, employer, whoever it may be. And there are two different kinds of inquiries. There is a hard inquiry and there's a soft inquiry. Now, the hard inquiry occurs when you're applying for new credit. This means that you are looking to get a loan, a car, a credit card, a mortgage, whatever, looking to get something. You apply for something, that lender's got to pull your credit to see if you're eligible. That's a hard inquiry. That's that stamp that everybody else sees, and it does affect your credit score. Now, how much it affects your credit score? A few points per inquiry. So the more you have, the more points your credit score will go down. And not to mention, the number of inquiries you have does have an effect on the approval ratings for the business credit cards. Along with hard inquiries, there are soft inquiries. This is just when employers checking your credit to determine your eligibility for employment, or an insurance agency's checking your credit to make sure your rates are going to be a certain level for the insurance. Existing creditors, if they want to check on possibly giving you an increase or not, if management's not done properly. And they soft inquiries do not affect your credit score, so you don't have to worry about any lenders seeing any soft inquiries that are on there. Now, when the lenders pull your credit report, and again, anytime they pull it, they're going to place that inquiry. They're going to pull it from one of three bureaus, typically, or more, They'll pull it from Equifax, TransUnion, or Experian. And these are the three major consumer credit bureaus that the banks are pulling from. They don't always pull from three, meaning Experian, TransUnion, and Equifax, but they may pull from one or two. Lenders typically pull a report from one bureau to make it, like what I just said. They typically pull from one bureau, but sometimes they will pull from more than one bureau to compare. And that's just because these are three separate bureaus. Sometimes information is reported on one bureau and it's not reported on the other. So a lender would want to compare two bureaus to make sure that that's not happening and there's not something negative that they're not seeing on the other report that they pulled. And then, like I mentioned, they will pull from more than one bureau to compare. Now, credit bureaus lenders report to. This is the business side. If you've got a business credit card account that reports to business credit, they're likely going to report to one of the three major business credit reporting agencies. These are the most popular ones: Dun & Bradstreet, Experian Business, or Equifax Small Business Enterprise. The full name spelled out. There are many other little smaller business credit bureaus that may or may not be reported to, LexisNexis, Accruent, etc. But these are the most popular ones and typically are what the major lenders are going to report to. Now, if you've got a business credit card that's reporting to personal credit, they're going to report likely on one or more of the three most popular consumer reporting agencies, and those are the same bureaus that they're pulling your credit from. They're pulling your credit from to determine the eligibility. So they'll just report on either Experian, Equifax, or TransUnion. Now, business credit cards and personal credit, the reason I mentioned that on if they report on personal credit is because it does happen. I mentioned that earlier too in the beginning of this series. Business credit lenders, sometimes they don't report to business accounts at all. They sometimes will have, or some lenders, should I say, will have an account on your personal credit score, and it can affect your personal credit. It can affect your consumer credit score. It's affected by the balances. If you have too high of a balance, knowing it's a business credit card and you have to place higher purchases typically with a business card, knowing you're placing a higher purchase on that credit card that's reporting on your personal credit, it could affect your credit score because consumer credit score, the FICO scoring system, that utilization is calculated in. So you want to make sure that you've got good balances below 35% so not to affect that credit score. Knowing business balances can go higher, obviously, it can affect that score if not managed well. These accounts do not in any way help your business credit profile, meaning they're not building business credit, they're not reporting to business credit, and they're not helping you build that business credit score, which is very important as a business owner. Something you really want to think about. Yes, funding your business is important. Yes, separating the expenses is important. Separating the credit is important. But you want to make sure that not only are you separating the credit, but that you're building your business credit, because there are too many types of loans out there that require your business credit score to be a certain level before they will approve you. And without that score built up or developed or established, or whatever you want to call it, these lenders are not going to say yes. Now, I recommend, because there are business credit cards that do report a personal credit, if you're looking to separate the two and you don't want to build or affect your personal credit, make sure you're doing your due diligence and researching where the lenders report. Call the bank, call the underwriter, call the credit card representative, whoever you have to speak to, get to that knows that answer, and make sure that they are not reporting on personal credit. If you apply for business credit cards that report to personal credit, as I mentioned, this is going to affect your personal FICO score. And for the reasons, like I mentioned, your debt utilization, your balance being too high, your length of credit history is another reason that it could affect your credit score. Meaning you've just opened a bunch of new accounts on your personal credit. Now you have to let those accounts age because you've got brand new accounts, which affects the score. It also affects fundability. But on the flip side, if you've got business credit cards that are well managed, it essentially could help your personal credit score. So you don't want to, hold business credit cards reporting on personal credit necessarily as an all negative. There are some good aspects to it. It can help your overall credit limit, which will help overall your utilization, as long as the balances on those credit cards are, well managed. But increasing your credit limit gives you the ability to put higher balances or more balances on your personal credit without it affecting your score as quickly. And it itself, increased limits on your total credit in itself increases the credit score. Your overall revolving credit profile is going to increase. Overall, having business accounts on your personal credit profile shows multiple accounts, added accounts, as long as it's not too many and they're well managed. It'll just show that you have revolving credit accounts that you can open, maintain, and not use inappropriately, I guess, so to speak. Now, interest rates on business credit cards, they're very similar to any other credit card that you have. And remember, interest rates are revolving cards, not charge cards. Interest is just a fee paid by a borrower to the owner as a form of compensation. That's just broken down. On credit cards, they're charged in the form of an annual percentage rate, and they're fluctuated based on the strength of the economy and the credit worthiness. So what that means is you've got an economy, and the economy is going up. Like right now, our economy is going up. Things are looking good. That means with the economy going up, the interest rates are going to go down a little bit because we've got a stronger economy. We're showing that we are building back up to pay our bills on time, etc. Creditworthiness obviously has a play in it. A lot more so than that economy in regards to what the interest rate it is. The economy goes based on that Federal Reserve number. Creditworthiness shows what they're going to give you based on what they offer, which is based on the economy, if that makes sense. So the good news about interest rates is they do go up, they go down, they do fluctuate, and they're charged in the form of annual percentage rates, which I'm going to go over in just a minute. The interest rates are added to balances older than 30 days on these business credit cards. That gives you time to pay these balances off if you don't want any additional interest added. But if so, again, it'll be added after that 30 days as an APR. Now, the rates are typically higher for unsecured financing. That's a given. I mean, unsecured financing, there's no collateral. There's nothing saying or telling the banks they're going to be paid back. They don't have a house or a car or anything to give them the money back that they've given you in the event of non-payment. So that being said, because the risk is so high, they're going to charge a higher interest rate or a higher fee to award you the financing that they're potentially awarding you. Now, an annual percentage rate, I talked about that earlier, and this is really important with interest on business credit cards. An annual percentage rate, the definition is just an interest rate that's charged for borrowing, but it's expressed by a single percentage amount, which represents the actual yearly cost of funds, not the monthly. So that interest rate, let's say you're awarded, and this is just for example purpose, but let's say you're awarded 10% interest rate on a credit card, which is very possible, 9.99. That doesn't mean they're going to charge 9.99% on your balance every single month that you don't pay. What it means is they're going to break that 99% down by the annual rate, by 12. They're going to divide it. And then that monthly interest is the divided rate of the APR, that 9.99 divided by 12. This is also known as an annual interest rate, APRs. And then they can usually be negotiated, as I mentioned earlier. If you have good credit, or you've got good management, or you've been utilizing that account for a few months and you've been paying your bills on time, not excessively utilizing them, or you've been paying them back in full, but you're concerned about the interest rate, the banks typically will work with you. It typically can be negotiated. They're not going to drop it by 5%, but they'll drop it by 1 or 2 more than likely, especially with communication and good relationship with those banks. And I say good relationship, that is key. Got to use these cards. You've got to show them that you can use them and you can use them correctly. There can be more than one APR per credit card account. And this is very important because I hear a lot of times people looking for cash. And when they're out to get a couple credit cards, they say, well, I'll just put, write a check to myself for cash advance, and I'll just use the cash that way. Well, if you do that, yes, you can, but just remember that there is an annual percentage rate specifically for cash advances, and there's an annual percentage rate specifically for the purchases and balance transfers. APRs on cash advances are typically a lot more expensive. Why are they so high? Well, first of all, the risk. Unsecured lines of credit, like I had mentioned before, no collateral, no assets, risk being seized. And most applicants are taken for their word. There's no financials or bank statements or anything other than their credit report saying they're going to pay them back. So personally guaranteeing with no collateral, no assets, no financials, they're going to increase that payback or that interest rate up a little bit because of that heightened risk. Of course, like I mentioned earlier, you have the economic factors. You've got that prime rate that if that goes up or goes down, they're gonna change their interest rates based on that prime rate. Your unemployment, your housing market all affects the prime rate. As our unemployment changes and housing market changes, so does that rate. And then, of course, the lender margin has an effect. All banks, all lenders place a margin on that prime rate to give themselves some money. Some of them give a little bit higher margin than others, and that increases the interest rate from 9.9 up to 13.9 or 15.9. So that's also why the interest rates are so high. So with business credit cards, we talk about interest rates and possibly reporting on personal credit. Why choose business credit cards? Well, first of all, this is not a traditional loan. You're paying back what you use, not what you borrow. You got a lender that's willing to approve you for $20,000 potentially on a business credit card. That does not mean you're paying $20,000 back, and you don't have to start paying back on that $20,000 within 30 days, which is what a lot of loans will do. You have access to benefits and features. With business credit cards, you get 0% introductory interest rates. No interest for 6 months to a year, 18 months, or depending on the card, 3 months, depending on the card. But this ability alone gives you the chance to use the money, pay it back, and not pay extra. You're basically using their money that they're lending you for free during that introductory period. That is an awesome feature, and most lenders will not offer that. And then, of course, you do have the option to make minimum monthly payments. Most of them do offer those terms, and that's where revolving credit lines come to play. As a reminder, charge cards do not. Like I mentioned earlier, business credit cards, you have the room for negotiations with most of these underwriters. If you get approved for $5,000, but your credit's 800 scores and you've got $25,000 credit cards, something's not right. So you call the bank and you just talk about it. You negotiate, find out why they approved you so low, negotiate that limit, and they'll a lot of times bump you up to the limit that's more appropriate to your credit. Business credit cards also are really good for startup businesses. And I mentioned that earlier because, startup businesses are hard sometimes to get funding for. A business credit card is quick funding. If you've got the good credit, you've got the business with the appropriate matching records, meaning your state records matches to all the information provided on the application. If everything is matching and everything looks good, your credit is good, they're going to they're going to approve you, right away. If they approve you right away, you're getting that card in less than a week. Now you've got funding in less than a week. sometimes in just a matter of days, because some banks overnight the cards. So you've got a great opportunity for startup businesses to get quick funding and to build your business credit profile, which will enable you to get additional and alternative loans and forms of financing and funding for the business in the near future. This is also a good opportunity to reserve for reserve funds. I mentioned that earlier too. Business credit cards, this is a really great place to have something to hold back in the event that you need something to get you by while you're waiting. Let's say you have an invoice out or contract out that comes, it doesn't come due back for another 30 days. Well, this credit card is going to get you by. You place whatever balances you have to. You have the time to pay it back. You can even make minimum monthly payments. If there's an emergency, if something goes down, your system fails and you've got to call tech support or whatever it may be, and you've got to put this huge repair bill on your credit card, there you go. You're now digging into your credit card, making minimum or smaller chunk payments versus your business bank account taking out of the daily operational funds that you've got available. So great opportunity for reserve funds. And not to mention, you're building your business credit profile and score. Now, of course, it's not required by law for banks to report to business credit, but a lot of them do. Not all, but there are plenty of them that do. And it, regardless of building your business credit profile, you yourself can even report some of these. Those that don't report to business credit can report for them. So this will help build that business credit profile and score. Now, the benefits of the business credit cards, they're separating your personal and business expenses, sometimes your personal and business credit. Not all of them are going to require a guarantee. That means there are business credit cards out there, corporate cards, that you can open based off your business alone, based off your business credit alone, which is obviously a choice or a place that we want to get to. If you don't have the business credit yet, you get some personally guaranteed lines, then you move forward to the corporate lines. But not all of them require personal guarantee, which is beneficial for those who don't want to use their credit. You do get typically higher approval limits with with business credit cards. Now, personal credit cards, I have seen $20,000, $30,000, $50,000 credit limits on business credit cards. I've seen limits above $100,000. They will go up, and they'll go up high depending on your needs as a business, your personal credit, your management of the lines from the date that you've originally opened it. So you've got really good potential with business credit cards to give you some high limits. Many of them offer introductory interest rates and no annual fees. This is obviously a good opportunity to put balances on your credit cards for that time frame and not have any interest added on. You're saving hundreds of dollars a year in annual fees alone for those types of cards that offer them. Of course, you typically get lower APRs than consumer cards. Now, this is not always the case. I have seen consumer cards that will go lower than business cards, meaning they might open at 7.9% versus 9.99%, but I've also seen capping out much lower than capping out at personal, meaning I've seen personal credit cards or consumer cards cap out above 29%, 30%, give or take. I've seen business cards cap out I've seen them cap out at 29%, but the majority will cap out at 24%. So you've got, and typically, even then, at the initial approval time, you're initially going to get approved with better rates than you would on personal, even if their general rates go lower or go higher or don't go higher. The business cards, based on your credit, because their stipulations are a little bit stricter, they require a little bit better credit. They're going to offer you somewhat of a little bit better credit, interest rate because of that. Now, you can add employee cards with a preset spending limit, and this is really good because you're able to manage your employee cards. You can give your employees the option to make purchases based on your industry or your business, but you can manage it. You can modify it even and give them preset spending limits versus, having the available funds for them, or the total available funds for them. The payback terms can be tailored for business needs. This means if you have to have your payment or your due date changed to a certain day, the banks will typically work with you. They can help you in relation to paying your bills back or paying that balance back on time, as long as you work with them based on the needs of your business, based on why, not because you're drowning and you just can't make payments. But if your business, like for instance, you have a contract and it's coming in 45 days later, you can pay it off in 45 days. well, you're going to be a little late, but they'll work with you on that. So they're a little bit more flexible when it comes to tailoring their payback terms for the business needs. And then, of course, as I mentioned earlier, these cards, this is a benefit, the ability to use these cards as a financial reserve for your business. I mean, you just can't, you can't beat that. You have something that's available to you. You're not paying back unless you use it. But if you need it, you've got it available to get you through until the next month or next contract fulfilled or whatever it may be that you need that reserve for. Now, how to qualify for business credit cards, excuse me. You need a score of 680 or higher. You have anything above 700, you're going to see much better results. There are plenty of 680 scores that won't make it through or won't qualify, but I have seen and I have pushed through myself personally credit applications with 680 scores and above. Now, you do need to have some seasoned revolving accounts, and this is not authorized user accounts. I'm not talking about accounts that somebody else opened and they allowed you to use. So I'm accounts that you opened with your credit, you paid the bills back on time, and then you manage those accounts and potentially, hopefully, increase the limits up to the limits that they're currently at. You can't have any derogatory accounts, no open derogatory. This means collections. You've got paid collections, that's fine. Open collections will lead to declines. No bankruptcies on your credit report. Just can't have them. They won't allow them. I've seen, I think, one of the umpteen banks that qualify for business would allow bankruptcy over 5 years. And I think that was the one that, I don't remember which chapter bankruptcy it was, 7 or 11, but not many of them. So you should be careful with your credit. Make sure you don't have any past bankruptcies, or at least make sure it's gone before you do apply. And then your income does have an effect on business credit cards. You've got to have some kind of income, employment, retirement, investment, Social Security. Have something coming in to show the banks that you can afford to pay it back in the event that the business cannot. Authorized user is an individual that the account holder grants financial access to. I mentioned that earlier. An authorized user, this is a really big point or factor in determining eligibility, because if you're the authorized user on all or most of your accounts, you probably won't qualify. They do not count as seasons accounts, and they don't work for the banks. They don't prove that you can open or manage the accounts. They do not help approval limit amounts. That means the banks, when they're determining how much they're going to approve you, they're not going to help with approving that high dollar. Usually authorized user accounts are high dollar limit accounts, 25, 35, 45 is what I see a lot of the times, $1,000. The banks aren't going to approve you that high amount if they see an authorized user account with that high limit. If they see your account with that high limit, they may. The authorized user accounts can affect your credit approval, meaning they can hurt you. So if you've got an authorized user account that has a negative account on it, or a negative report on it, it can hurt you in getting approved, because the banks will see it as an account that's, not well managed, and you're using it. They don't know if you did that or not. So they would essentially decline you, or they could decline you because of it. Now, of course, on the flip side, it can improve your personal credit score. If you've got, authorized user accounts, you've got more limits, a better ability to manage your utilization. And if it's managed well, it'll help your personal credit score, which, if you're just trying to raise your score, wouldn't hurt you at all. Just make sure you have seasoned accounts that you opened when applying for business credit cards. And of course, it can improve your credit approval ratings. How that is just payment management. They're not going to help you. It's not going to help in how much they're going to approve you. But if you've got managed accounts on there, when it comes to negotiating, and you can say, well, I'm using this, and this payment history has been, 4 years old, and I'm the only one who's made payments, that might help with negotiating when it comes to increases or dropping interest rates or whatever it may be at the time of initial approval. Gosh, man, when you're using a business credit card, how to use them, there are some certain things you've got to remember. Make your payments on time. If you can make them early, do it. With business credit, to build that business credit score, it's built by payment history primarily. So if you're making a payment on time, then you've got that average credit score, I think, of 80, I think, from 0 to 100. If you're paying early, then it's going to go higher. If you're paying late, it goes lower. So make sure that you're paying, if at all possible, earlier than the due date, but at least by then, making it on time. Use them when you need them, not when you want them. What that means is if you've got the ability to purchase something and pay it in full, but you just don't want to, be careful, because you could get yourself in a bind. And it's just a matter of credit cards and management. Don't use them so much that you can't pay them back, or that you won't have them available at the time that you really need them. And we never know what happens in the future, so just keep that in mind. Maintain communication with the lenders. You have got to maintain this communication for more than one reason. I mentioned this earlier, relationships with the banks. If you want increases, lowered interest rates, if you want to have that tailored payment plan, or the payment term with them because you need help on paying back based on your business, whatever it may be, you got to have communication. If you're going to max out your credit line, communicate with the banks. Always communicate with the banks so they know that something's going to happen, or they know that you're not in a bind or potentially going to screw them over, for lack of better words. Know what you're spending. This goes along with using what you need and not what you want. If you spend too much, or if you put too much on there, or if you don't realize what all you're using, you can get caught up. Interest rates are expensive, and before you know it, you've maxed out your card and possibly gone over the limit. So just be careful. Make sure you're tracking what you're spending and know how much you're using, how much of a balance you have, what your interest rate is, and what it's adding every single month if you're not in that introductory time frame. Make sure you have a short-term payback plan, so not to accrue excessive interest. I've said that time and time again. Interest adds up, and when you have this account or this balance for months upon months upon months, this interest is going to make you pay thousands of dollars more than you would have paid potentially if you had just shortened that payback plan, or put together a payment plan so to get it paid back in a shorter amount of time. Short-term financing is in my opinion, the best option with credit cards. There are some ways not to use a credit card. It can hurt you in these ways. You do not want to max out your lines immediately after approval. Now, business credit cards, it's obviously you have to put most of the time bigger purchases on a business credit card. That's common. And if you have to max it out, that's okay most of the time. But what you don't want to do is max it out right when you get it, and then not communicate with the banks, and then maybe throw a minimal payment there, here or there. What's going to happen is the bank, it'll be an automatic red flag because you just opened it and you've already maxed it, and they're going to be concerned on whether or not you're going to pay this back. And especially if you don't pay a chunk relatively quickly to show them that you're only using it for a particular time frame. So the communication is vital. If you do have to max it out, communicate. Let them know, tell them why, so they know not to throw up red flags and not to cancel, cut, or deplete your line, or lower it, should I say. Don't make a habit of carrying high balances but only making minimal monthly payments. And this is just my advice. If you plan on putting a high balance, try to have that, I mentioned earlier, payback plan. Try to get it paid back within a few months versus a year. Obviously, if you have to, that's what these lines are for, make minimum payments if you have to. But the more often you do that, the more often it shows the banks that you're a little less able to manage those higher limits. And it gives them, unfortunately, reason to decrease your limits. So just be careful. Make sure you're managing them well enough and showing the banks that you can handle high balances or high limits just as you can handle the small ones. And of course, don't go on limit ever. Don't do it. It's just not good for you. It's not good practice. It's not good, relationship, or good for the relationship. It's not going to show the bank that you can handle your line in any way. If you have to go over, if you know you have to place a higher balance than that limit, then call the bank before that purchase. Tell them what you need to do and see if they'll increase your line. Because going over is just, like I said, it's not good for you. It can ruin your introductory period. If you're in one, they'll take it away. It can cause fees. And then again, of course, it could affect your line itself. If you go over the limit, they might drop your line or cancel it at that because it shows them that it can't be managed. Don't use them for personal use. Business credit cards are for that, business credit cards. And some business lenders will cancel your account if you're using them for personal use, or if they're seeing a track record of personal purchases or expenses. You don't want to use them without proper management of your expenses. I mentioned that earlier. Make sure you know what you're spending. If you don't know what you're spending, you're not managing them well, you'll get mixed up. You'll get caught up in interest rates. You'll get caught up in late payments or whatnot. And that's where business credit cards, or any credit card for that matter, can drown you. So just make sure that you're managing them well. And of course, don't be scared to use them as you need them. Don't let the inability to go over the limit without it costing you more money, or don't let the fear of improper management bringing down your limit get in your way. These cards are meant for your use. Just know that when you use them, they need to be used appropriately. Talk to the banks if you need to use too much of them. Make sure the banks are fully aware that relationship is good. So if you have to do something out of the norm, they're not going to come back and affect you or hurt you or hurt your account in a manner. You can use them. Just maintain communication in order to use them without an effect. Now, if I didn't answer any questions on this webinar on business credit cards, I do get some questions quite often, so I added them on here, and I'll just go over them real quick. I know I've gone over my 30 minutes. I wanted to get this done in 30 minutes. I know I went over that. So real quick on the FAQs on business credit cards, if my credit doesn't qualify, can I use a separate guarantor? Yes. Although most banks do mention that the guarantor for the card or cards must be authorized, officer of the company. So you need to be a secretary, vice president, partner, co-owner of the company for the bank, for their eyes, based on what they say to apply for the credit. Now, in fine print, do they check? Most of the time they don't. But I'm not saying to go apply if you're not a part of the company. I'm just saying that most of them don't check on that. Now, can I use multiple credit partners for my business to acquire more funding? Banks do not allow multiple applicants under one EIN. And this is pretty normal. They don't. You've got one business, that bank is going to fund that one business. And they're not going to do, you've got one business with one applicant. They're going to fund that one business with you. They're not going to continually give you more and more money every time you put a new applicant on there, because then that basically just gives you unlimited funds. So they have to cap and maximize or reach, or basically just cap what they're lending out to each business and each guarantor at the same time. Now, if you've got separate EINs, you can use as many credit partners as you need, because the EINs will be under that particular credit partner, which is not going to hurt what you're trying to do under yours. And then, can you get multiple credit cards from one bank? Yes. Now, of course, you have to be careful. You can't apply for the same credit card. A lot of banks do have multiple cards that they will offer businesses. Just keep in mind that there is what's called an aggregate lending amount. And this is how much that bank is allowed to lend to you, like I mentioned earlier. So they can't lend a lot of times more than 50, 100, 150, 180, 200,000 to one business. So just be careful on that, because if you've got 5 cards and none of them are going above 50 grand or 20 grand, you'll know why from that particular bank. And then, of course, you have to keep in mind the amount of time in between each application. If you're applying for Bank A from, let's say, Joe Blow's bank, well, you don't want to apply for Bank B a few days later. Let that application sit, hold on to it, use it for about a month, and then come back and apply for the next one, just to make sure that you're not throwing up red flags, that you're overextending yourself and reaching out for too much right away. I really do hope that this information for you guys was useful. Of course, if you have any questions on business credit cards or about acquiring business credit cards, please feel free to contact me directly at the number or email address you see on the screen. Or, of course, feel free to look at my website, unsecuredfinancesolutions.com, to learn more about acquiring business credit cards as well. Thank you so much for your time. I appreciate all of you coming in, and I look forward to seeing you the next time around on this wonderful series of financing your business from start to finish.